All right, so welcome to the exchange. So, first and foremost, I'm not a financial advisor. I'm just here to give you my opinion on what I see in the stock markets. Looking to the left to see what has happened, then looking to the right to see what may happen. Do your own due diligence. Make sure you invest money in things you know about. If you don't know, invest in yourself and learn. That's the best way you can make money out here and have some security in these markets. So, let's look at what happens to stock markets so we can get a better idea and some security in exchange. Welcome to the Exchange Show.
All right. If you were looking for the exchange last week, my apologies. I had some technical difficulties. I was supposed to put the videos back up, but then life started happening. I had some issues with the house, got a storm issue, dealing with that, and just got really busy with work. So I actually still work, and sometimes I actually have to do a lot of it. At this time, though, welcome back. This is StarBucks. This is our first stock we're going to talk about on the exchange this week. And if you notice, there's a huge gap. There's a huge gap. I did cover this last week, and it's actually still okay. You haven't missed a move. The biggest move here is going to be this gap fill. Now, the question is, do we have enough volume to get to this next point, which is breaking into the gap and filling it? This is a great option to run if you're looking to run an option on it. Now, make sure you give yourself enough time and never a time period on how long this may take. As you can see, this was a that was an $11.50 something cent move. Oh, sorry, a $10 move. We had a $10 move there. Now, with that being said, you never know how long it's going to take to fill that gap, but this is a great one to look at. As you can see, I already have a take profit that I want taken here at the top. I'm actually going to move that down a tad, just a little bit. So it's really going to be $90. If you want to do an option going further out, you can say $90 for maybe a year from now, or 6 months from now, or 5 months from now. But it all depends if you're going to be bullish on StarBucks. Currently, in the daily, I think I have a buy. Yeah, I just got a buy on Friday. Now, let's be honest, a lot of times when you get a good looking setup like this, you want to make sure that you don't lose it. I will actually look for at $86. Only reason is because I used a 48-day moving average, and that's a really good way to aim for targets, either buys or sells, or you take profits. So I'm looking for here that $86 to $89 or $90 area for StarBucks, because I'm looking at it to be bullish. On the 4 hour, I got a buy, and that was on May 9th. So that was 3 days ago. But if you look, this right here eats up your profits when you're doing options. You need bullish movement or bearish movement to make your money in options. If you get this sideways, this eats up your money, your profits. Why? Because the time or theta decay. So you don't want that. Okay. So our next thing we're going to be covering is we're going to talk about CVS. This was actually on my list last week too, and I'm going to show you why. So you're looking at the 4 hour here. Let's take this stuff off before we do anything else. So first you have the imbalance candles here. They have to be broken up so they can even out. But in the daily, here we go. CVS is set up just like Tesla, and it's about the same, about another $10 move. Now here's the thing. There's nothing saying when this is going to go up. This is only stating that there is a gap. And if you look, there is another gap here. So we have not one but two gaps for CVS, and you have to know when these are going to get filled. You don't want to start an option right away and then have sideways movement. You want to make sure you're in the move when it's going in the right direction. In the daily, I'm still in the sell zone, and in the 4 hour, I'm still in the sell zone. So this is something I'm just going to watch, and I will probably do an alert when I see price breaking the, like right above here, 57.43. And the reason I'm doing that is because that will be above both of these moving averages. But at this moment, the 9-day and 14-day are tied up. when this happens, this is consolidation. This consolidation most likely will break to the upside, but I'm not going to front run it. But I will look and see the strength of the move, which is up. All right, so that's CVS. I'm just gonna keep it on my watch list. All right, we got two more. We got a classic here. We got Disney. If you've been in the stock market for a while, you know Disney is always a good company. It may have some ups and downs, but at this time, I've owned Disney for years now. I'm not gonna lie to you. I own a lot of Disney, so um, I want you to take a look. And the reason I bought it years ago when it was at a better price than this. So, and Disney, be careful. If you're looking to trade Disney, be careful. You have gaps to the upside and gaps to the downside. At this point, you have earnings that were positive. All right. They took off right before earnings. And then the day of earnings, they said, I'm done. And came down. So right now we're at a strong support area. We have to see if this is going to continue down. If you're looking to play this to the downside, of course, you could do the earning point of about $101. Now, generally, it seems like Disney wants to fill this gap. The reason I'm saying that is it needs to, because it's completely imbalanced at this moment. And once it fills this gap, it can then have the buying pressure to go up. And if you don't know this, Disney was about $200 at one point. So I was there when it was about $200. 203. That was its high. All right. And it came down. So we had all this distribution and movement down. And now we consolidated. The price you want to see Disney break is about 125. Once it breaks 125, that's going to be probably off to the races. And there's probably a gap up here. This is really old. This is probably a supply zone I was looking at a while ago. But if you're looking for Disney, if you're looking at the weekly, we had a strong selling candle. It's probably going to come down to at least 101 to that $100 area. So if you're looking, that $100, if you're looking to get Disney, might not be a bad price for you. So we want to go over one more. Look at Oxy. So Occidental Petroleum, if you're looking at energy is pretty big, but we are in a downtrend right now for Oxy. And look for it if it continues down, I'm looking for a 61.58 for a good price to either have as a take profit. Oh, well, that lines up pretty nicely right in this area. So anything from 62 down to 61 will be a good place to take profit if you want to do a short on Oxy. We're at the bottom of the trend, so be careful. You don't want to get into a trade and be like, yeah, so they said get a trade here, and then immediately you get in the trade and it goes up to like here, right? $64. So you're starting to lose money in your option. You want to make sure that when you get in, you're in the strongest trend that you can be. You know it's going to go down, so you just need to wait. If it's going to go down, it's probably going to stay in this channel. So that means it's probably going to pop up again. When it pops up to either this area here at 64.70 or about 65 or $66, that's when you probably want to get it and do your short to continue down, because you want to make sure it stays in this channel to this $61 range. So one of the areas you can look for is a pop off the 14-day moving average, which is 65.70. Remember, as these price action moves, these moving averages move a little bit too. So it's never an exact area. It's always just an area, not an exact pinpoint. So one of the things, in case you were interested in Tesla, but you don't have the money to buy shares or do the calls or puts, you can look at this TSSL, and this is going to be a ETF that runs on 2 times. All right, this is an ETF that is double the regular Tesla. So you would look at, if options is what you're looking at, you would look at the volatility. So volatility and of course theta. Look at those Greeks. The main reason I'm telling you about this is you can still play Tesla daily. on options. Even if you have enough, you can buy and sell your shares, but this entry point is a lot cheaper than 160, 170, 180. This is only $7 right now. Now, if you look, you'll see that currently you got a gap, minimum gap right there. But remember, this is 2 times what the movement of Tesla would be. So an option, yeah, if you do it right, you're doing really good. And if you do it wrong, you're going to be losing a lot more money. So take your time with it. Make sure your analysis is good, and see if this will fill the gap here down to 549. If it does, you might be able to make a good amount of money. You just enter the sell zone, and I don't know. Take your time. Do your own analysis. But that's it for the exchange this week. Thanks for watching. Once again, if you haven't heard of Davey Dave Charts, he gave me a shout out last week about my video issue. So I appreciate you, my man, and put your information in the link. Thanks a lot, man. See you next week.